Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. In the midst of the current economic volatility and market uncertainty, it's always nice to find stocks that provide investors with high capital appreciation and ultra-high dividends. It also helps to find a company operating in a sector with amazing economic tailwinds. That's what you get right now with today's income pick, Dorchester Minerals LP, traded on Nasdaq under symbol DMLP, a stock we last profiled back in March. John?
Yeah, thanks, Mo. When we last profiled Dorchester Minerals in March, the company stock was trading at $27.17. But on July 20th, just a few weeks ago, it hit a new record high of $32.46 for a short-term gain of approximately 20%. And currently trading at around $30 per share, DMLP stock is still more than 10% over our profile price when we last looked at them. Its high yield dividend remains intact as well. It's an annual payout of $3.69 per share for a whopping yield of 12.31%. Again, for context, the U.S. inflation rate is 3.1%.
So one may ask, why such big gains in frothy dividend? Just so you know, West Texas Intermediate crude oil was trading below $70 per barrel in late June. Fast forward to 2 months, and the same barrel is now trading 25% higher. Again, West Texas crude oil is currently trading around $80 per barrel. Big gains, but oil market is bullish. And as analysts say, we are well towards $90 per barrel oil. And oil hitting $100 per barrel is possible.
Yeah, absolutely. And there are reasons to be skeptical of the bullish sentiment, but the fundamentals actually back up these bullish claims. For one, OPEC Plus is going to put a huge deficit into the market into the second half of 2023. The Saudis are unlikely to reverse their cuts at $90 or $92 per barrel. And the U.S. administration simply doesn't have any good options for bringing the price of gasoline down. Moreover, the downside risks are pretty limited so long as OPEC Plus remains its production limits.
Meanwhile, the Brent prices have registered 7 consecutive weeks of gains. Again, this is all good for companies like Dorchester Minerals LP.
Yeah, you're right. Just a little background. Excuse me. Dorchester is oil and natural gas exploration and production company. It owns royalty productions, or otherwise known as interests, in about 592 counties and parishes in 28 states. This diversity gives it exposure to virtually every single oil and gas producing basin in the U.S., which allows the partnership to take advantage of multiple commodity prices and demand development cycles. Dorchester Mineral LP's independent engineering consultant has estimated that its total proved oil and gas reserves are something in the range of like 92.7 billion cubic feet of natural gas equivalent. Approximately half the company's proved reserves are oil and gas, and about 42% are gas. The company's reserves are growing. Back in July, it completed an acquisition of 17,000 gross acres and 900 net royalty acres in 13 counties and parishes across Louisiana, New Mexico, and Texas. And going back even further, in September 2022, the partnership acquired mineral royalty and overriding royalty interests totaling 2,100 net royalty acres located in 12 counties across Texas and New Mexico.
Let's start, John. Let's talk about numbers here. How did Dorchester Minerals do in the last quarter?
Well, oil and gas prices were lower then than they are today during the second quarter of 2022. In fact, in June 2022, oil was trading at more than 120 per barrel. So as expected, it reported solid results, but the numbers were below second quarter 2022 results. Second quarter operating revenue was actually down 35% at $30.6 million. Net income came in at $19.8 million or 50 cents per share. Year-to-date revenue was around 20% at around $48 million. And year-to-date earnings per share were down at $1.21 per share compared to $1.76 per share in the first half of 2022.
And how do these financials impact its dividends?
Well, as an energy and exploration company, Dorchester Minerals pays a quarterly distribution, and it fluctuates. And it will fluctuate based on oil and gas prices, which are in turn based on supply and demand and where we are in the economic cycle. Its second quarter distribution was 0.676 cents per share, which is down from $1.13 per share in the second quarter of 2022. the quarterly distribution works out to an annual dividend of $3.69 per share, or as already noted, $12.31 per share. Again, because Dorchester is an energy stock, its payout will fluctuate. It actually raised its distribution for 7 consecutive quarters in 2021 and 2022. In late 2022, actually, the payout was a record $1.35 per unit. Now, strong oil and gas prices right now could help juice its dividend over the coming quarters.
And John, earlier you mentioned DMLP stock is trading near records high. Could you explain a little bit about how it has been doing recently?
Yeah. Buy and hold investors have done quite well with Dorchester Mineral. It's currently trading up 7% year to date and 15% year over year.
And why is DMLP stock at record levels when, their dividend is down on year over year basis?
Well, that's a good question. And that's like part of the joy of like the energy sector. While it comes to limited partnerships like Dorchester, their distribution will ebb and flow. That uncertainty is actually baked into investing in these kinds of stocks. A lower dividend doesn't mean the company's doing poorly. More often than not, it simply means that oil and gas prices were down in one particular quarter. So by the very nature that Dorchester stock is trading at record levels, it means investors are still bullish on the company and its outlook. That's why Dorchester stock is up 15% year over year. It still has a whopping dividend of 12.3%. Now, for comparison's sake, if a big blue chip stock announced it was cutting its dividend by 50%, the share would probably crumble. And that's because blue chip companies make a ton of money and pay a reliable quarterly dividend, and in most cases raise that payout on an annual basis. If they cut their payout, it means they're facing broad-based money troubles, which will, of course, often sends investors running to the exits. So even though Dorchester's most recent quarterly distribution was lower than it was in the previous quarter, and on a year-over-year basis, investors aren't worried. And the share price trading at record levels is testament to that bullish sentiment.
John, thank you so much for your analysis. Just to recap, Dorchester Minerals is light on news, and you never hear any comments from management in their quarterly results. But the company makes up for that with, wonderful quarterly financial results and inflation-crushing dividends. The outlook for Dorchester Minerals stock is solid. The American oil and natural gas industry raked in record profits in 2022, and the momentum is expected to continue in 2023. In July, oil prices one of the biggest monthly gains since January 2022 and best July performance in almost 20 years. More broadly, U.S. crude oil production is expected to hit a record of 12.76 million barrels per day in 2023 and rise to 13.09 million barrels per day in 2024. This should benefit DMLP stockholders and result in reliable ultra-high dividends. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.